If you are still entering trades based on hope, today's video is for you. Hi traders, this is your Nifty Guy. I hope all of you are doing well. Most traders lose not because the market is bad, but because they enter without a plan. In this video, we'll focus on planning the trade before the market opens, identifying key levels, mapping out multiple scenarios, and understanding how to react to price instead of predicting it. This approach helps you stay disciplined, control risk, and avoid emotional decisions during live market hours. If you're serious about improving your trading process and not just chasing quick profits, you are in the right place. Make sure you like the video, subscribe to the channel so that you don't miss the daily Nifty plan. And before we get into the analysis part, I am adding the link to the Telegram channel in the pinned comment. Make sure you are subscribed there as well. Uh, no courses ever, nothing ever, no paid cha tips, no premium channels will ever be sold to you via that particular channel. It is simply one more medium for me to connect with my audience. That's it. So make sure you are subscribed there as well. And now jumping straight to today's analysis, markets opened with a gap up and immediately went into a good gave a good up move. Now we opened above previous day's high where we were looking to create a long entry, but of course we cannot create a long entry without a valid pullback. Uh, the markets again after creating a new high came all the way till around the breakout levels, which was the day previous day's high, which is an important location by the way. And out here formed a good double bottom and then again moved up slowly and steadily. Now, anybody would have even a long trade could have been initiated here as well with a small stop loss below this particular swing. But then I avoided this particular trade because the structure wasn't entirely clear. This was a good rally, no doubt, from around the end of last day, good rally. But then from here, we did get a good significant amount of pullback, and maybe after creating a lower high, we could have gone down because the overall sentiments in the market are still not very positive, right? Today's price action has been very good, no doubt about that. But then, keeping in mind the overall sentiments out here, yes, this was a valid trade as per the reversal setup that we use. There are two reasons, right? Number one, uh, it formed a good bottom after a good move on the downside, formed a good base. The structure definitely changed. Second, the location matters. So this double bottom actually formed at previous day's high as well as current day's low. And the current day's low was not breached, so that was also a very big positive sign out here. Uh, Post this particular up move which came in market again, kind of entirely, if you look, market traded the entire day in side apart from this brief price action around here in the first 10 minutes of the price action, right? If you combine these two candles, that's 10 minutes of price action, and throughout the day market was majorly inside this particular range itself. I only took one single trade today, which was a trade on the short side. I actually took two. So out here around after that brief up move, I observed this particular simple triangle consolidation, and I was expecting the markets to actually break out on the upside and was prepared to take a good trade in case if market would have consolidated out here and then breached this particular trend line on the upside. But then market had other plans and market breached the trend line on the downside and also formed a good double top out here if you observe after the brief up move. What also adds confidence in trading this double top was the fact that uh, the day high that was created earlier in the day at the start of the day was not breached, and that was the reason I entered into the first trade of the day out here. I entered into puts after doing a lot of time pass. Uh, I exited this particular trade at cost somewhere around these levels. Now, the trade did go into very minor profit. Uh, Around 7, 8 odd points were there, which I could see on the screen. And after doing some time pass, so markets did come and take my stop loss. So I always make sure that once I have there is some amount of profit which is shown on the screen, I will not be taking a loss on that particular trade. Plus the option buying trades that we have to look, right? So we always look for quick entries and quick exits. Out here, it was a pretty long trade with market playing with my position and my emotions all at once. And that was the reason why when it came back to my cost out here, I exited. What also again looked like some buying might be coming in from here, wherein it did go up above uh, the last swings as well, but then immediately started to come down. And this was the place where I re-entered into the puts. So I re-entered into the same particular trade, the same option price that I was uh, earlier booked at cost, and I entered into the same strike price. Because this happened very, very quickly, the exit as well as the entry was again uh, without giving me sufficient time to change the strike price. So it was quite in the money, and there's no problem in that because once I entered out here, the markets were at 25,300 and my strike price was 25,350 put. And out here as well, when this particular level broke down, I could have entered in 25,300 put as well, but then I went ahead with the same strike price. The chart was open, and I could see after this brief move or manipulative move, taking stop losses, it was going in the right direction. This is where I again re-entered into the same trade, and that is what I always tell you guys in option buying. Be quick to accept your stop losses as well. And if you get a chance, re-enter, right? Do not wait in hope that the position is going to turn into your position. Today, it actually happened that after coming back, also the position did go into minor losses, very, very minor losses without triggering the stop loss, but then it did go eventually, but what if this was a reversal out here and markets would eventually give you bigger losses? So that is the reason why I suggest quick entries and quick exits. And in case of market giving us a re-entry chance, just like today, re-enter. There is no harm in that. And this is what I did. The second trade of the day exited around this candle, 23 odd points. Simple trade, nothing much to do about it. Went very, very smoothly. Post this particular move on the downside after market also breached the current day's low, market formed a good double bottom. Now I was in the lookout of this particular trade based on the hourly time frame. So I was looking for a clean swing to use a Fibonacci level, and this is what I got on the hourly time frame. And I had marked this level on the chart. And if you see, markets came down all the way to 50% of the entire up move which came in, formed a good double bottom, good base, and then what a rally it was towards the end of the day. Now, sadly, I did not participate in this because the breakout came in at around 240, and I have this rule of not entering into fresh trades later on in the day, like 230, 240, 245. These are the times wherein I avoid fresh trades because what if the market goes sideways for the time being, and I don't want to take fresh risk around the end of the day, especially because I do not even carry over positions overnight. So yeah, one simple trade I will want to qualify this as one simple trade only. With, of course, that was with a re-entry after closing the first position all at cost. And so yeah, only one trade, 23 points in the kitty for today. Nothing major. Plus, keeping in mind the entire day was a very range bound day, a good sideways day. Uh, I am happy with the outcome of 23 points. And these are the things which I believe you should keep an eye on in the market. Like you can see this particular consolidation which was happening uh, after the up move. It was like a flag and pole. And that was the reason why, because of this flag and pole thing, I was anticipating a breakout on the upside. But then again, we do not predict anything. We can, of course, anticipate. There is no problem in anticipating or keeping a bias. But then whatever direction the market shows you or the price leads you in, that is where you enter and you participate in that particular trade. So that was for today's trade. I hope things are pretty clear. I will be deleting everything. On the daily time frame, today we have got a very good candle. So after so many days, we have got a candle which qualifies as a reversal candle. After so many days of downtrend, where today's candle was a candle which has a higher high compared to yesterday's candle, a higher low compared to yesterday's candle, as well as the closing is above the high of yesterday's candle. So all in all, a good candle. So whether it is a trap for people on the long side, or we can actually anticipate a reversal. That is something which the time will only tell, or maybe we can still remain range bound in this bigger range, right? So market has been trading up and down in this particular range. If you see 25,430 odd levels on the upside and 24,920, 930 odd levels on the downside. So this is a good 500 point range in which the market can remain sideways again, forming a base before moving upwards. And that is the reason why, again, we should keep our trading specifically focused to only intraday levels and quick scalps for right now. Plus, the budget session is there. Today, again, there is US rate cut decision as well, I believe, Fed's rate cut decision. Uh, let's see how it uh, what is the outcome and how it impacts the market tomorrow. We'll keep a plan of action very, very simple. Another thing which I want you to focus on is that the 25,430 odd levels, which I mentioned right now, that would also mark a good double bottom on the daily time frame. So just keep an eye on 25,430 odd levels. And yes, a good base is in the formation, kind of in the Nifty, and 25,430. These levels will only be significant out here. Again, yes, today's low is perfect. We'll keep the plan of action very simple for tomorrow. Above today's high with a pullback, we can look for a long entry. It is only below today's low where I look for a trade on the downside. Now, mostly again, today's range was sideways, and I believe we should avoid trading in this particular smaller range. And in case of any price action, like after we break out with some divergences, if we can get a scalp on the downside, of course, take it. Uh, Price action based trades are absolutely fine to go at, but then again, your trade should be backed by logic. Like this particular trade was a good trade because again, it came with a good confluence of uh, forming a double bottom around a good Fibonacci and good and important Fibonacci level. So yeah, these are the things we should keep in mind. So that's the simple plan for tomorrow. Remember, the goal is not to trade every move, but to trade the right move with proper risk management. Stick to your levels, stay disciplined, and let the market do the rest. If this video added value, make sure you like, share, and subscribe to the channel. It really helps the channel grow. I'll be back with another nifty plan. So until then, trade safe, stay patient, and trust your process. One good trade with discipline is always better than 10 emotional ones. I'll see you in tomorrow. Cheers, and thanks for tuning in, guys.